Good morning and welcome to this Wednesday, January 22nd edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as we prepare for the trading day ahead. Well, I tell you, the market yesterday did see a little bit of selling, not too surprising. Certainly was extended. We got a lot of sentiment issues in the market, but I saw futures right back up again today. It's going to be really difficult to bring the market down. I don't know that we're going to see a sell-off. Maybe we see a little sideways consolidation, but that remains to be seen. This is a very, very strong market. And, when you look at secular bull market advances, you look at the history of them, trying to step in front of them and get in the way and try and imposing your will on the market is very difficult. The market has a mind of its own. And just when you think you can't go any higher, it just keeps on trucking. But let's go ahead and take a look at what is going on here, or what happened yesterday. You can see from this candle glance, Dow Jones Industrial Average, S&P 500, NASDAQ, mid-cap, small cap, all of them down yesterday. Not a lot. And considering what the market was thrown yesterday, when you look at what happened with Boeing, and all the issues they've got with their 737 MAX plane. You take a look at the coronavirus in China, the reported cases there, the first case in the U.S. Let's see, there was something else going on yesterday. And then, of course, the 800-point drop in Hong Kong Monday night into Tuesday. So you had all of those different things, facing the market Tuesday morning, and yet the market just, went down a little bit. But if we had seen that when the market was very volatile, if we had seen those kinds of headlines, the Dow Jones would have been down 400. And so it's just a different market that we're in right now. The market, when you got a low VIX and you're in a big advance like this, the market tends to just overlook things, keep its head down, and just keeps moving forward. So we did see a little bit of a pullback, not much. Today, futures right back up again. We'll see what happens. There was a little bit of nervousness, I think, in the market yesterday. We saw, even though the market, tried to come back, the leaders yesterday, and when we look at the sectors, were all defensive areas. And so that's what this down here is showing us. We've got the real estate group rising, moving to a new high. Utilities moving to a new high. Staples moving to a new high. And some of you might say, especially those who followed me for a long time, might say, well, isn't that a bad sign? We've got, the market trying to go higher and defensive groups leading. Well, in a bull market like the one we're in, normally we see wide participation. Every group goes higher. It's just a matter of which ones go higher faster. And yes, these groups this past week, that's one of the concerns I've had in the market, just short term, is that we've seen strength in these defensive areas, much more so than we've seen in some of the other aggressive areas. So short term, yeah, it's a problem. Longer term, I think if we look back, and I'll try to recall or try to remember here in a couple minutes, but if you look back over the last 3 months and pull up the sector summary at stock charts and look at the last 3 months, you'll see all the aggressive groups leading this 3-month advance. Over the last 3 months, you can see, yes, real estate did just break out. Utilities have broken out, Staples. But I think if you look at the last 3 months, these groups, for the most part, they are badly lagging the aggressive areas, and that's what we need to take away from this. Healthcare also had a pretty nice day. These were the 4 groups right here that led yesterday. These were the only 4 sectors that went higher. Energy, once again, another move to the downside. Doesn't seem to be able to find a bottom. Oil this morning down another 1%, 57.75 per barrel. That is not going to help. Oil just can't seem to catch a break here. It did move back below the 20 and the 50-day moving average. And so now I would say next key area is going to be this triple bottom right here, just below $56 on the XLE. But I would be watching crude oil prices until crude oil prices stabilizes, starts to move higher. I think we're going to see some issues with energy. All right, the 10-year Treasury yield. I'm going to go ahead. I know there's an economic report that was due out here at 9 o'clock, so I'm going to get that for you. And it was the FHFA house price index. That was due out at 9. Yeah, it just came out, and it rose 0.2%. The market was expecting a rise of 0.3%. So it did come in just a little bit below expectations. You can see the 10-year Treasury yield right now, mostly unchanged. It is up 1 basis point, 1.78. I don't really like the fact that we've rolled over here. You can see that the yield is moving lower, and this had a pretty big impact in the financial sector, especially among banks. And it's not just what's going on with the 10-year Treasury yield when you look at the banks. It's also looking at it relative to the 2-year Treasury yield. So I have this chart up here showing you the 10-year Treasury yield minus the 2-year Treasury yield. So this is the yield spread. And you can see that from the latter part of August, it was rising. And it actually moved to a 52-week high at the end of December. And when you look at the banks versus the S&P 500 during that same period, rising, moving up into December near a 52-week relative high. Not quite there, but certainly moving in that same direction as that spread. But last few weeks, we can see the spread has been dropping again, and financials have really taken a big hit, or at least the banks have taken a big hit here. I don't know. I think it's a little overdone. I don't think that the yield, I don't believe the spread's going back down to 0. And so I do think that the bank's probably getting hit a little harder than they should. And you can see down here below, this is just a 1-year chart, and this is the correlation, showing you the correlation between the yield spread, 10-year minus 2-year, and then the relationship of the banks versus the S&P. So in other words, it's mostly positively correlated, so that when the yield spread's rising, banks outperform. When the yield spread's falling, banks tend to underperform. That's what that correlation tells us. Now, if we go into the sector summary, and I pulled this up. This is a 1-month chart of the financial industry groups. Look at what's at the bottom down here. There are only 3 that are lower. Full line insurance and life insurance are slightly lower. Banks over the last month are down 2.56%, which is pretty significant considering the market has just been on a tear to the upside. But again, it's the interest rates coming down, the spread coming down, which has been a little bit of a problem here. I wanted to show you, let's go back here to the sectors. And I said I would show you that 3-month. So let's take a look at the 3-month. Technology, healthcare, communication services, financials, and industrials. So of the top 5 groups, 4 of them are aggressive. The only other aggressive group is down here, consumer discretionary. And you can see consumer stocks have just taken a little bit of a back seat to the rest of the market. Overall, though, all 11 sectors have been higher. So again, talking about wide participation in a bull market, back when we were consolidating in 2019, at any point in time, if I had pulled this up, we probably would have seen, 6 of the sectors up, 5 down, or 5 up and 6 down. I mean, it was just back and forth during that period of consolidation where we would see leadership in one area of the market, but then the rest of the market wouldn't participate. Well, now you can see all areas are participating, some much more so than others. And I think this is a pretty nice breakdown. I mean, I think this is a pretty bullish breakdown. This is the kind of stuff that I'd like to see. Yes, I would love to see consumer discretionary doing a little bit better. But again, if you're putting together most of the puzzle pieces, I think we're starting to get a pretty good picture of what's going on here in the market, and it's bullish. All right. One other thing before I get into earnings, I wanted to mention the put-call ratio. It did jump yesterday to about 0.6. So that carried the 5-day moving average just up a little bit. We're at 0.49. But this is a 10-year chart. And the top here is the 5-day moving average of the equity-only put-call ratio. And for those who are unfamiliar with it, it's a sentiment indicator. And essentially what you are doing is you're taking the number of puts divided by the number of calls, equity puts divided by equity calls. And so the lower this ratio goes, it means the fewer puts versus calls. Calls, if you're buying calls, that's a bullish bet on the market. And so when you see this equity only put call ratio declining, it's telling you that an unusual proportion of these options are being played on the call side, meaning more and more people are getting bullish, really bullish. And when you start seeing option traders getting really bullish, that normally is a sign that we're not necessarily at a major top where we're going to see a bear market begin to emerge, but just short term. A lot of times we'll see a top in the market. 2014, that was the last time we saw readings down this low on this 5-day moving average. And before that, it was 2010, 2011. 2014, we went in, this was in a summertime reading, and we ended up pulling back in the summer of 2014 for a bit. But again, it was summertime. I mean, now we're doing it's in January, which still, even though we've gotten beyond the most bullish period of the year, this period through April, even into early May, is still a pretty strong period for equities. So it's going to be interesting to see whether or not, or how much, I think it's going to have an impact, just how much of an impact this bullish sentiment reading has. And again, it's a contrarian indicator. So when everyone's bullish, that's when we should be thinking a little bit more bearishly. Down here at the bottom, I just did the same thing with the VIX, a 5-day moving average. And if you ever want to know how you can do this at stock charts, in the type of chart, normally I'll have candlesticks or I'll have a line chart. Just go down and hit invisible. And by putting in invisible, all of the data, the individual daily data, doesn't appear here. The only thing that's showing is the overlay, which is my 5-day moving average. So there it is. There's the 5-day moving average, 0.49. Here it's sitting over here. So this is how you can show it without, if I put the data in here, if I change this, you really want to see a mess, let's just go ahead and put candlesticks in here. I mean, look at that. I mean, you can still get a sense of where we are, but you can't quite tell where the close is and what the 5-day moving average, where that is. So it's just not a very pretty chart. Just, I think, simplifies it, makes it look a lot better. Just go in here if you ever want to get rid of that data. Just type in the invisible. And same thing down here under indicators. I've got the VIX, invisible chart style, and then the overlay, 5-day simple moving average. So that's how you can set this up. The VIX, I'm not really sure what to make of the VIX. I mean, the VIX now is the 5-day moving average starting to go down. We're deep into this secular bull market. Options traders are incredibly bullish. Why isn't the VIX down at 10 or 11? Why are we still above these prior lows? It still shows us the market still has this sense of nervousness. Not much, but a little bit. And I don't know if we should be worried about that or not, but it's at least worth watching. I was a little concerned as the S&P 500 kept going higher. We had the higher lows in the VIX. That's now reversed, and you can see this has come back down. So I'm not quite sure what the VIX is telling us now. Good to be aware of it, but again, I'm not sure what it tells us. All right, let's move on. Let's take a look at some of the earnings reports out last night and this morning. First, we'll start with Netflix. Netflix did beat on their top line, had a huge beat on their bottom line, but I don't think it's comparable. They mentioned that they had over-accrued taxes in the first 3 quarters of the year. I don't know if that's why their earnings are so much higher, but their earnings came in $1.30. The market was looking for 52 cents. But on briefing, it said EPS not comparable. I'm agreeing with that. I don't know what the comparable number is. I didn't see it. But Netflix did beat their subscriber numbers, and they have guided their Q1 earnings per share higher. So all of that's good news. Last time I looked this morning, Netflix was up 0.25% pre-market. So not really seeing any kind of major gap up. We'll just have to see how Netflix trades after coming out with those earnings. I think the biggest thing on this chart to me is this gap up here, getting through that gap fill around $362. I think that's what I'd be looking for on Netflix. And as I pointed out last night, Netflix has not been one of the leaders relative to the internet space. It's a great company. I think long-term, it's fine. Short-term, as a momentum trader, I think there are a lot of other better stocks out there. IBM reported last night. Big report for IBM. They beat on the top line, beat on the bottom line, up 4% in pre-market action. You can see Wall Street wasn't exactly expecting a whole lot. 4% on $139 stock would be about $5, a little over $5. So it looks like it's going to open maybe 144, 145. Still going to have to negotiate this 148 area. So I wouldn't be surprised to see a move up to 148. It's just whether we can get a close over that level. COF, Capital One Financial, beat on their top line, beat on their bottom line, stock up 2.25% pre-market. You know, I was looking at this one just over the last couple days on a relative basis, and I wasn't quite sure what to make of it because on this move to the upside, at its peak, relative strength was really nice. It had moved up to about a 10, 11-month high. And then over the last month, it had been coming back down, but the volume had just been kind of so-so. I would have, you know, if I had to guess, I would have guessed that maybe they were going to have a decent report because of this move to the upside and all the relative strength that was shown prior to this consolidation period. Stock is gapping up 2.26%, so that's going to be roughly, I don't know, two and a quarter, which would put us up somewhere around 104.50. This is going to be an interesting one to see whether or not it can break out on the open. If it does, I would find that to be bullish. 105 is what I would be watching. That's the highest candle body, 105. So if COF opens today above 105, I would give it the benefit of the doubt. I would expect that it is going to continue to move higher. UAL. UAL did beat barely on the top line, beat by 3 cents on the bottom line, 267 versus 264. Really no change that I saw pre-market. And you can see it's not been one of the favored stocks in the airline group. So it's not one that I would be overly excited about heading into earnings. And seems like the market is not really excited, even though we did have a slight beat there. Let's see. One company that reported last night that is looking pretty strong this morning in pre-market is Navient Corp, NAVI, stock up almost 5% pre-market. I didn't see their revenue numbers, but their earnings were a very nice beat, 67 cents versus 57 cents. So a pretty strong beat there. This is another one, though, that for the last 2.5 months have been trending lower, but it was during a consolidation period. I don't like to see that long of an underperformance, and we got not too far from a 52-week relative low. So I don't know. It looks like the company came out with a pretty good surprise here. With a 5% move higher, you're talking about close to, I don't know, 65, 70 cent move, which is likely or going to be close to maybe making this breakout, probably going to make this breakout above 1440, 1445. All right, earnings this morning that came out. Let's talk about Johnson & Johnson, J&J. Came up a little short on revenues, beat the bottom line by 2 pennies, 188 versus 186. Market, though, not overly excited by that miss on revenues, down 1.73% despite Johnson & Johnson guiding fiscal year 20 revenues higher. I always have a little problem, though, when you miss your number, especially you miss revenues in the last quarter and then you raise revenue guidance. I don't know. I'm always skeptical of that. You know, you just promised a number, you couldn't beat that. Now I'm supposed to believe you're going to, hit a higher revenue number going forward. I don't know. Maybe it's my CPA/accounting background that just makes me a little skeptical there. But anyway, the stock is down a couple percent. I would watch probably the recent lows down here around 143. You can see the breakout above 142 and change. That's going to be a pretty big level, 50-day coming up from underneath. So if we do see weakness, I would watch for support down there. Abbott Labs, ABT. We got beat on the top line. They matched EPS estimates, 95 cents. Stock's up 1% pre-market. Nice rally here heading into the earnings report. Pretty good volume, too. This is another one, though, with the relative strength declining for the last 6 months. I probably would be, I'd probably look elsewhere in the group. Let's see, NTRS. This is Northern Trust in the asset manager group. They did beat top line, missed on the bottom line, though, $1.70 versus $1.77. Stock down 2.25% in pre-market. And you can see, again, the last 3 months trending lower. I went out, and this was part of the earnings sneak preview that we did last night, and I had looked ahead all week at earnings reports. And I'll be honest, the reports coming out this week just don't excite me. Next week's going to be a much different story, I think. So this could be another thing that the market's going to have to try to deal with. I mean, as I look through some of these earnings reports, I didn't go over it. Ameritrade missed. Wintrust, WTFC missed. Both those companies missed top and bottom line. Rogers Communication, RCI, missed on top and bottom line. Baker Hughes missed on top and bottom line. Fifth Third Bank missed on their bottom line. This is not, I just didn't think this week was set up for great earnings reports. And so far, I would say they haven't been spectacular. They've been okay, but not spectacular. And that would be another thing I would think would hold the market back. But so far, market not doing too badly. Let's move on to upgrades and downgrades. I wanted to go over first ADP, automatic data processing, being upgraded. Stock is breaking out, looks pretty good, but it's more of a slow mover in the software space. And as a result, you can see software has been very strong. On a relative basis, ADP is at a 52-week low. So it is looking good. I like the sideways consolidation breakout. We may begin to see a little bit more relative strength given that. The upgrade, I'm okay with the upgrade, especially with the breakout, but I would just say there are a lot of other software stocks out there that look a whole lot better. And one of them is right here, FTNT. This one is in one of our portfolios. It's been a huge performer since that earnings report back in November. They've got another earnings report coming up in a week or so, maybe a little over a week. But this one being upgraded looks a lot better to me because it has been a leader in the software space. NPTN. Also upgraded today. This is Neo Photonics. Stock's been a pretty good performer in the semiconductors. Just recently was near about a 10-month relative high. Pulled back as it was consolidating. So again, you see this a lot. Stock breaks out, looks pretty strong on a relative basis when we go back. I mean, it's been trending higher. But as soon as it starts to consolidate for a bit, it begins to lose relative strength. A lot of times that's an opportunity. I wouldn't read too much into that. And then today gets the upgrade. I actually like that upgrade. Let's see, downgrades today. Let's look at AGN. This is Allergen. Downgraded. I actually think this stock, even though it's begun to roll over a little bit on a relative basis, it's been one of the top performers in the pharma space. Pharmas have caught fire, and so it's lost a little bit of ground, but it continues in this nice uptrend above the 20-day moving average. Maybe we get a 50-day test, but I'd be surprised if it goes much below that. I don't know. I kind of disagree. Maybe short term, the downgrade will pan out, but I disagree longer term. Estee Lauder, downgraded. This stock has been on fire. I think it's a valuation downgrade probably. I disagree with it. It has been an incredibly strong performer in the personal products area. I think 20-day test probably would be a great opportunity. One other downgrade, HII. This is a defense stock I mentioned last night. It's been on fire. I completely disagree with this downgrade. I think downgrade is going to be an opportunity. Stock is one of the best performing stocks in the defense group. It has been on fire the last 3 months, as you can see in terms of price action and relative strength. I expect they've got some good news coming. So I think any kind of a pullback near that 20-day would be a good entry on HII. All right, let's move on. I want to just show you something that you may or may not be aware of. If you go to the dashboard and you go down here under scans, I'm going to do a new scan. And let's see, I think I can probably do it here. I just want to show you, for instance, let's just say, well, I've got the S&P. I think I've shown that one before. But let's say you wanted to see all the stocks in the mid-cap 400. What you can do is just go into the indexes, click that, add it, and now I would just even get rid of all this. I don't care about the volume. I just want the group. Oh, I just need to get rid of that. So here's the group is the S&P 400. I can run this scan. And look, 400 matching results. That's pretty shocking. And then I can just take this and I can say, all right, let's store these results in a new chart list. So I can now come over here and I can say, let's just call it S&P mid cap 400. And I don't know your numbering system, but let's just say, you know, we wanted this to show up at the very beginning somewhere. So I just go, you know, number it in that order. I'm going to hit OK. And let me just go back to the dashboard and click on a chart. And now up here, you can see my number one, my first chart list is the S&P Mid-Cap 400. And I can look at all the individual charts if I want. But the other thing I can do is I can click on this View All and hit the summary. And now I've got all these 400 stocks in this summary that I can now sort. So for instance, I could put these columns in here: sector, industry, scooter. Well, I don't need that because that's going to be mid-cap, all of them. Actually, not all of them are mid-cap. Let me go ahead and put that in there. It's kind of interesting. Even though it's the mid-cap 400, you do have some small-cap stocks in here, as you'll see. But let's go here and take a look. So now I've got this thing set up so I can I can sort by sector. So if I wanted to know all of the communication services stocks in the mid-cap 400, let's say mid-cap 400 breaks out and I really like communication services, I could quickly come in here and I could sort based on just that group or discretionary or whatever. It's going to be in alphabetical order. I also go into industries. And let's see, maybe talked about the banks earlier. Oh, biotechs. Maybe the biotechs are something that I really like. Actually, if I click on the scooter first and then click on the industry, it will sort it in industry order, and it should hold the scooter rank. So let's go down to biotech. There, now you can see the highest ranked biotech mid-cap stocks. So you can just quickly, I mean, I did all this in a minute. I probably could have done it faster, but I wanted to make sure everyone understood and saw it. But here's all of a sudden a stock in the biotech space that was going sideways for a while that's now broken out and is trending higher. And that was just quickly by, you know, taking these components, dropping them into a chart list, and then being able to use that view all summary to go in and sort all of those 400 stocks pretty quickly. Anyway, pretty cool. I use it a lot. I have, you know, my components. I don't know if in this account, if I have it or not set up. I think I do. Yeah, down here, I've got my Dow Jones components, S&P 500 components, NASDAQ 100, S&P 400. So if I ever want to go in and look quickly at those, I can pull them up. Anyway, that was just a little tip. Let's go on to the 3 you must see, and let's wrap up the show. First one I want to show you is EVRG. Now, if you're a candlestick fan, which I am, and I see a big advance like this, and then I get a huge gap up and a failure with that black candle, that is a sign for me to get out. Now, I don't know what EVRG is going to do, and it's certainly not a guarantee, but when I see a big advance and a huge, heavy volume reversing candle, because when we gapped up, we opened up around 71, and when everybody's buying, market makers are on the other side, shorting. They're providing liquidity. And this black candle tells me they got control of the action. So I would expect to see a move back down to the downside. Maybe it's just one day. Maybe it's just a buck. I don't know. But I would expect that we're going to see more weakness today on EVRG. Next up, IGT. Now, IGT, if we move into the relative chart, you'll see that it's part of the gambling group. Gambling stocks that had been on fire. IGT, with huge volume right here, took out all these prior highs and has just simply not been able to move higher. And now it's been pulling back with the group. I just think if it gets back to about 13.5, that's where all the buyers came in. This is one maybe I would just kind of keep on my radar. It's not a great stock. So if I ever traded a stock that is an underperformer, I'm going to have a tight stop. I wouldn't buy it here. I wouldn't even buy it here. I'd only buy it at my price, and I'd see if it didn't hold, I'd get out quickly. So IGT is just one. Because of the way it's trading in the group it's in, I thought it was worth mentioning. Finally, I'm going to bring up Costco. I think Costco is a great looking chart here. I love the equal highs coming across, the rising lows. That is an ascending triangle off of an uptrend, and it broke yesterday on increasing volume. I think the stock is a buy from the current price. If it does pull back, I think all the way down to the 20-day moving average, I would accumulate it. I think Costco looks really good here. All right, that is it for today. We'll see what happens in the market throughout the day. But for now, I would simply expect, what we've been getting, secular bull market. It's very difficult to bet against it. We could go sideways for a bit, but we'll see. Everybody have a great day. Be back tomorrow over at Stock Charts for your next Trading Places Live. Have a great day, everybody. Happy trading.